Good morning, traders. It's 8:02 a.m. Chicago time on Monday, the 27th of November, 2023. As you can probably tell, my voice is not all there. It's um, it's uh, it's a consequence of having little kids. They're just little WMDs that run around your house and just spread biological material. Um, This morning, it is the 27th, Monday, the 27th of November, 2023. This is episode number 2578. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's hop on over to our convergent trading pre-market summary sheet here. This morning to look at the overall picture and help ourselves get set up for the day by looking at the broader markets. Before I do that, I wanted to throw this at you. Convergent trading by chance for Cyber Monday and Black Friday. Today's the last day that the discount, which occurs about once a year, ends. So I'm letting you know in case you've been looking or waiting for a discount. I know some of you have asked. Today is the last day. The link to go check it out is right there at the bottom. Go to ct.pro/join and enter code Black Friday, BLK Friday 23. Again, that ends at midnight Central Time today. So if you want to get a move on that, this is the time to do so. All right. So what do we have today? We have a mix to a slightly risk-off market. Okay. So overall, we're seeing the Russell falling a fair amount, kind of leading the pack down, followed by the DAX. The other indices are down 20 or so basis points. No earnings, no major earnings before or after the markets today. Relatively quiet news day. We do have ECB's Lagarde speaking. In case you're in the euro currency or euro-based products, you want to, of course, make sure you have your news feed and pay attention to that. I haven't heard comments because my feed was not turned on. But ECB's Lagarde released a statement. This is not a time to start declaring a victory. We need to remain attentive to the different forces affecting inflation and firmly focused on our mandate of price stability. So no relief there from Lagarde. Looking at the overall week, we have that pink section right there, and it tells you what kinds of things that are ahead. The bold are potentially market moving or key areas. So we're looking at, today the calendar has Lagarde, new home sales at 10:30 we get Dallas Fed, consumer confidence out of South Korea at 4 Eastern. These are all Eastern time. Retail sales out of Australia in the evening at 7:30 my time. But if you look at the pink section there, you see that tomorrow we have GFK consumer confidence, PDD Holdings, which is about $32 billion in revenue, and Intuit. Those are also tomorrow. Wednesday, we do have the inflation rate out of Germany. That's going to be important. U.S. GDP growth and the Chinese NBS manufacturing PMI. We have, in terms of earnings, we have Salesforce, a pretty big, pretty closely watched company. Thursday, we have the French inflation rate, the Eurozone inflation rate, Canada GDP growth, U.S. core PCE. This is going to be a big one. We want to see what the numbers are actually cooling off on prices, U.S. personal income and spending, and then China's Caixin manufacturing PMI. We do get Dell as an earnings report on Thursday. Friday wraps up the week with Canada's unemployment rate. Even though it's a new month, the unemployment numbers for the U.S. are pushed to the following Friday, which, by the way, the following Friday, the Friday of NFP, which will be the 8th, which I took as a day off before looking at the calendar, at the economic calendar, that is actually the last day we will trade December 2023. We will be rolling all of our US index futures on the 11th. So Friday's settlement is going to dictate what the adjustment is, the back adjusted pricing is. And then starting on Monday, the 11th of December, we'll be trading H4, which is March 2024, starting December 11th. Okay. So night overall, what's happened overnight? Light news flow. Talk of a ceasefire extension. They're negotiating a 2-day ceasefire extension in return for, I think, 20 hostages or something, and a bunch more from the Israeli side to be exchanged. Crude oil prices have been cooling off. Crude oil is below the 78 handle again. It's trading at 75.20. Crude was down a little bit more this morning and recovering. There's just not been a disruption to crude supplies or the use of energy as kind of a negotiation tool. So prices have fallen off a cliff here. OPEC is meeting this Thursday, December 30th. They were supposed to meet yesterday, and they just couldn't agree on a bunch of stuff, so that meeting was delayed till Thursday. It is expected that OPEC Plus will be pushed by Saudi Arabia to implement further cuts to get prices to where they want them. Where do they want prices? In the 80s, baby. In the 80s. That's where they reach. That's where they think the supply-demand curve, kind of the little dot in between supply and demand, should be by controlling supply. They don't control demand. And so they're looking at, squeezing the market a little bit in crude. So Thursday is going to be very important for crude oil traders. Markets anticipate Black Friday performance results. So today, through our news feed, we're going to hear how the different retailers did. What do you guys think? That should have been the poll. The poll should have been not, do you anticipate a normal market? By the way, today's poll, do you anticipate regular action this week or more slowing down or quietness? Looks like 55% of you expecting the market to be back to normal this week, and 45% of you think the markets will likely be slow this week. Again, what I should have made the poll is, hey, what did you think of Black Friday? Why don't you tell us what you thought of Black Friday compared to prior years? I don't shop on Black Friday. I did see, it seemed to me like Black Friday started in October this year, the advertising and the sales. And there was a viral video that went around, I think it was Target, where someone was pulling the Black Friday labels, sliding them to the side to see what the normal day-to-day price is, and they were exactly the same prices except the label said Black Friday, but there were no reductions. So I don't know. It seemed very lackluster. I didn't see crazy lines or whatever. But retailers are expected to report, and we'll see how that responds. Looking at the S&P today, multi-distribution profile, barely 170,000 contracts, which is in line with what we had last week and the week before. We continuously start at this point, or have at this point arrived at less than 200,000 contracts, which kind of stinks because, that's what happens in a market that's in a rally mode. And we've been in rally mode for about 2 weeks now since the inflation report. 100% of the inventory, 100% of that 170,000 contracts traded below Friday's settlement close, specifically the close. And then the range is 16.75 points, which is very, very middle of the pack. Hang on 1 second. Sorry. Gotta blow out the old honker. Very middle of the road range. One thing to note is the new harmonic numbers. You can see they all fell. Harmonics fell off a cliff last week. And in the computation for harmonics, we did not include the holidays, right? So this is clearing out the holidays. We see that the S&P fell from about I think it's 5.75 or 6 to 5 points per rotation. So we're seeing this volatility crush going on as rotations shrink and the ranges shrink. The ranges, by the way, do not pay attention to these ranges. They're not up to date. That's why they're all equal to last week. I had some technical issues and couldn't update those this morning. But the rotations on the ESNQ, Dow, crude have fallen quite a bit. RTY fallen a little bit. And just, that should guide your expectations in terms of how far your target should be, how far your stop should be, and so on and so forth. And I'm expecting more of the same, to be honest with you. Expecting the numbers to fall in terms of volume and rotations going into the holidays, especially if we continue to hold these prices up here in the upper 4,500 range in the S&P. And the market continues to rally. So let's take a look at what we've done overnight. So you could see here that basically on this platform, I don't clean out. Normally, I would clean out these 2 days. I would just remove the data for these 2 days. Edge Pro X does not have the capability at the moment to remove that data and keep it off. It's actually very a big stickler about making sure every tick is represented, so it'll just reload it if you try to remove it manually. But overall, you could see that we had what looked like a double distribution profile starting to fill in here as the market falls and become more balanced. Overall, the action is pretty nondescript this morning, other than the fact that we are below where we settled on Friday and or on Wednesday, and it's just been kind of sideways. So overall, not really seeing all that much going on. So here's Wednesday's action. This is the last full day. This is Friday's action, which is a shortened day. Wouldn't pay too much attention to that. And we are just well below it right down here. We're trading at 45.58 when balance was held on top of the close and so on, which was right there. The settlement reported here is settlement for Friday, which doesn't matter. But overall, we're leaving that balance above us. You'll notice that the balance on Thursday occurred on that big push day on Monday, and now we're exploring lower. So there's a pretty decent, we're at risk of again breaking the one-time framing up, which we've been on for some time. You can see the market has put in higher lows, and it looks to me like we're kind of stooping over. The main thing I'm going to be looking for this morning, in summary, is I'm going to be looking for buyers to come in and bring us back in line with the 45, 68, 50 area or so, the point of control of last Wednesday. I want to see if the buyers are hungry enough and believe these prices are cheap enough to bring us back to Wednesday's value, to Wednesday's point of control. If they're unable to do so, if they attempt and are unable to push, and we end up faltering in the 62 area, this is the first area I'm going to be watching carefully because this is a balanced profile. It's a value low there. It happened to also be Friday's low, but again, Friday didn't have anything backing it up. Then I'm looking for this thing to impulse down to basically squeeze those weak or late longs to move us back towards 45.50. Once we get to 45.50, the expectation is it's likely to be a two-way fight and so on. If they give those up, then we're going right back to this double TPO high that we've left behind and this low in the 36-37 range. So this, this is a pretty decent amount of range for a trade given the current rotation environment or the harmonic environment. But we're looking for it to go into 62, maybe push a little bit, and then if it falls out and it's not able to get back in, that's an indication of a short trade targeting the low of Friday and extending. By the way, Wednesday had a wide IB, pretty active open, and it never broke the IB, which is about a 2.5% historical probability that would happen, and it happened on Wednesday. Very unusual day, very balanced day. So getting out of that range on Wednesday is going to be pretty bad for the longs. It's likely to flush pretty quick, and the target becomes 36, 37 from about 62 to 65. And that'll be the big trade idea of the day, to come down and retest this area right here. This region right here. If it fails to hold the 36-37, then you're going right back to 45.20. That is the point of control of the balance down here. And that becomes your key target. Once it gets to 45.20, then we're expecting equilibrium. We expect two-way participation and for everybody to just calm down. If it does push through the 62, balances out in there and holds value, then it's very likely to test value high and go to the other side. The other side is 71.72. 71.72. The expectation is it stays in this region. If it starts at 57 and pushes into the value area and the point of control and pushes as far as 71.72, it's likely to hold in there. There is an excess high on Friday, so this is why I don't believe it'll have the energy to get back up there. There's an excess high. This is why my skew on the primary trade idea is 62 down to break the 55 back to 50, hold 50, and then start moving towards 36, 37, ultimately moving back to 45.20. That's the primary trade idea. The secondary trade idea is it does look cheap. It does look cheap. It gets back into value, but then it can only muster up a 71.72 test before it just settles in the middle and kind of sits sideways for the rest of the session with an end of day balancing. It is the Monday after holiday, so generally this is relatively quiet. Again, the news events that are going to be important are: is this thing going to start back up, and is it going to get worse in the Middle East, impacting oil prices, adding to risk exposure? Remember, the market really doesn't like risk, and it sells risk assets when there's more risk to rebalance. Second, does OPEC or any OPEC member say something to push crude prices in a way that make it doing business more expensive? But those are the two main kind of themes that are playing in the background. The other one is retail. Did retail get crushed on Friday? Was it in fact a Black Friday, or did they never get into the black on Friday? Retailers have done pretty good based on Q3 earnings, but the market's definitely paying attention to what they report today and throughout the week based on the sales that occurred over the last few weeks. I'll leave you with that. Don't forget, today is the last day to join Convergent on sale, 20% off. The link for that is go to ct.pro/join, and the coupon code is BLK Friday 23. That expires at midnight Chicago time. Good luck today. Mind your risk. Take it easy. It's the beginning of the week after a holiday. Don't stick your neck out too far. Good luck.